Hello everyone and welcome to Moementum channel. Today I wanted to walk you through my portfolio of passive income investing that I have with Wealthsimple and how this portfolio has grown over the span of the past 3 years. So as you can see here, currently this portfolio is sitting at close to 51,500 and we are showing a return of $1,621. This portfolio didn't start this big, so in fact, if you go back to 3 years ago, it started with very humble beginnings. Back then, I remember the initial deposit to this account was only about $500 at the time. And over time, through persistence and continuously contributing to this account, you could see how this portfolio evolved. And we are at a spot where it's a much larger portfolio in just the span of a short 3 years. Over the span of the past several months, I've really picked up on the amount of contributions that I've had. Not only I've maintained my daily deposits to the account, but definitely trying to take full advantage of the market declines. To me, when the stock market is doing poorly, like such as the times that we are at, it actually presents a wonderful opportunity to wanting to contribute more to the account and take advantage of the dollar cost averaging, buying the quality stocks, in this case because it's a passive investing account, buying actually into the exchange traded funds at a lower price tag. My investment strategy is really divided into a couple of key highlights. When it comes to the passive investing, I really emphasize on daily contributing to my account. It doesn't matter how large or small. Sometimes even if it's about putting $5 into my account or $10. But the beauty of the passive investing account that I have with Wealthsimple is that no matter the size of the contribution, even that small amount of money gets contributed and actually gets invested. So almost in real time, you're getting into the stock market and playing bigger stake into the stock market and really taking advantage of the ups and downs of the market. Second piece that I indicated even earlier on was the dollar cost averaging. What I mean by that is that obviously the stock prices go up and down. The same goes for different securities, including the exchange traded funds. So if you continue to put money into your account on a daily basis, you can take advantage of those ups and downs of the market. I would also take advantage of the dividend income reinvested. So as soon as my ETFs are actually earn any income in terms of the dividends, Wealthsimple automatically reinvests them into the similar type of ETFs based on the initial weight that has been assigned to that. So Wealthsimple ensures that my portfolio remains balanced. If the value of certain asset class in my portfolio goes higher up, it does the rebalancing automatically by purchasing additional funds of the other types of ETFs in this case, so that it's balanced afterwards. And there is a diversification because the type of exchange traded funds that I possess in my portfolio cover different wide aspect of the market. I have exposure to the U.S. stock exchange, I have exposure to Canadian stock exchange, I have exposure to the emerging markets, exposure to Australia and Asia markets, also have exposure in terms of the asset class. I do invest on the side as well through active investing, and for that I use a number of different brokerage accounts, including Questrade, Wealthsimple Trade, and most recently the Interactive Brokers. But for that, I really do research quality companies and really use that research to pick the ones that I believe that are going to bring the best value for me over the long run. This includes both growth stocks, and I do have investments in a number of them, including Apple, Twilio, which is a cloud stock investing, Skyworks solution, but also I'm investing in a number of companies that are more geared towards dividend payments, such as AT&T, Verizon, those are like communication and utilities companies, and a number of healthcare companies as well. Probably in future I can also make a video and go over my active investing. If you are interested in that, do let me know in the comment section below, and I would love to hear from you. We do post the findings from our research here on Moementum channel. As you know, Moementum channel is where we post videos on a weekly basis about stock market investing and finances as the main focus. So if you haven't subscribed to our channel, I do hope that you consider joining us and take advantage of our videos here. Moving back to our portfolio of passive investing, I wanted to take a deeper dive and take a look at how my accounts have grown over time. So I do have actually 4 different types of accounts, 2 registered accounts. One is the registered retirement savings plan, and the other one is a tax-free savings account. And this personal account has the aggressive investing tolerance, 90% in equity and 10% in bonds. But for the socially responsible portfolio is a slightly different angle. Here, I'm more invested in companies that are considered of their environmental impact, and as a result gives me exposure to different sets of exchange traded funds. So really wanted to explore and see how it does differently compared to the other ones. Maybe we can take a look as well to the activities of this account. I think what I want to really show here is how by investing on a daily basis, I actually get to take advantage of the ups and downs of the market. So most recently for today, you can see there was investment of $47 into my personal account, $52 and some change into social responsible account, and about $167 in my tax-free saving account. And if I click on them, you can see the type of exchange traded funds that have been bought under each one of them at different prices, of course. Here we get exposure to XEF, VTI, EEMV, XIC, ACWV, ZFL, VUS, and QTIP. And for social responsible portfolio, of course, we have slightly different exchange traded funds here. We have XEN, CRBN, ZFM, VIDI, and PZD. There might be a number of other ETFs here that have not been invested in today. So maybe I could explore and go back to a number of other ones. Just I can give you some ideas what they are. But you could see for the most part, the investments are done on a daily basis, except for, of course, the weekends or the days that markets are closed. So really maintaining that continuous contribution to the account that actually goes far. The last one I want to show to you is when I click on any of these accounts, you get some projections, how your money can grow based on your predefined automated contributions. So it kind of gives you an estimate. As you decide to contribute more or less to your accounts, these projections, of course, change by age as well. So it's kind of a good way to motivate investors to continue and wanting to contribute more to their accounts. So I get really excited playing with these calculator and trying to contribute more or less to see how these scenarios would change. But I want to also take a quick look at the holdings within this account. So underneath here, we have Vanguard Total Stock Market with a return of 11.3%, IEFA, which is for iShares Core MSCI for international equities. And you get a little bit of details here. We are exposed to large, mid, and small cap stocks in developed Europe, Australasia, and the Far East. Currently, we're sitting at a negative 4%. Next one is EEMV, which is for emerging markets. Here we get negative 6.9%, and here you are invested in emerging economies like China, Brazil, Russia, and India. Next, we have XIC, which is for Canadian equities, and here you get exposure to almost broad-based 95% of the market cap for Canadian stock exchange. So it's a really good way to get into Canadian stocks. And for global equities, we have ACWV with a return of a negative 1%. Here, it includes investment in companies including Canada and U.S., and the broad geographic coverage of this asset class provides superior diversification. So again, different assets to allow more diversification. And lastly, we have the U.S. equities, similar to the VTI, but here the focus is on U.S. stocks with a Canadian hedge in terms of the currency. And the return here has been 7.4%. As for bonds, which is 10% of my portfolio, here we have ZFL, which is your BMO long federal bond, and we have also QTIP, which is for U.S. inflation linked bonds. So, but of course with the Canadian hedge. The returns have been 9% and 3.3% respectively. Personally, having been invested with Wealthsimple for the past 3 years, I must say I'm quite pleased with it. Although the returns might not be the greatest at this time, I'm very happy that I've maintained this portfolio and built it up, and knowing that this is a passive portfolio. Last year, I earned close to $650 in dividend income alone, and this year I'm projected to earn $1,300 in dividend dollars, which is a nice growth in terms of my dividend income. A few months ago, I had actually posted a video, and at the time I had projected that for this year, my targets were earning $1,300 in dividend income, which based on my reviews, I'm well on track to hit that. But also, I wanted to reach 50,000 in the size of the portfolio. But given that I'm already well past that, my stretch target that I'm going to kind of commit to for the end of this year would be hitting 60,000 in terms of the size of this portfolio. So definitely would be continuing to make more videos and see how it goes. Hope you enjoyed this video. If you did, please make sure to like this video and subscribe to Moementum channel for more videos like this. And if you're interested to get started with investing passively, you may consider joining that through Wealthsimple, and do have a promotion link that allows you to take advantage of $10,000 managed for free for up to 12 months. Hope you enjoyed this video. See you next time.